What's up, traders? Let me ask you a question. Can you see this chart? Can you tell me it is in a downtrend or in an uptrend? You might be saying that it is in a downtrend. Is that right? But what if I tell you that it is in an uptrend? You might say, what are you talking about? We see that this instrument is creating a lower high and lower low. So it is definitely in a downtrend. How can you tell it is in an uptrend? Well, that's the puzzle. That is the secret that you need to know. Let me clarify. What you see in this downtrend is basically a retracement of an uptrend in a higher time frame. Let me show you. You see this downtrend is in a 5-minute chart, so the timing is here. So this is in 5-minute chart. So you are looking in 5-minute chart as in a downtrend. But let me show you in higher time frame what it looks like. Look at this one first. This is basically yellow area, right? Let's go up to the higher time frame. So what you just have seen in the 5-minute chart in a downtrend is basically this part. You see this yellow? This part you have seen in lower time frame. So if you see the bigger picture, what you see that this is basically in an uptrend. Look at this. If you see starting from here, it is in a strong uptrend, creating a higher high and higher low. And that is the secret most trader cannot understand. And that is the single most reason why traders lose money. Because as a trader, to trade correctly, to see the direction of the market correctly, you need to know multi-time frame analysis. That means you need to see a chart from higher time frame so that you know which direction market is going, to identify the trend, level, everything. So in this video today, I'm gonna show you how to do multi-time frame analysis. At the end of this video, you will be able to do complete multi-time frame analysis without any difficulty. Sound interesting? Then smash the like button. And also, don't forget to subscribe if you're new to the channel. My name is Nizam. I'm a professional forex trader helping others to become profitable. Sound interesting? Let's begin. Okay, so first let's understand what is multi-time frame. Now, as you see in the screen, this is a candle, right? Most of you should know about this. Now, say this is a monthly candle. So what a monthly candle mean? A monthly candle mean that the first of the month, this market open here. So if it is a bearish candle, that means the red candle. The market opened here, the first of the month, and then the price went up to this high, and then the sellers pushed the price down, came back here, and the sellers pushed the price again, and slowly all over the month, over the 30-day period, the price didn't came straight. There has been a lot of oscillation in between, but finally in the middle of the month or at some point of time, the price came well below this low, and last day of the month the price came here and closed in this position, and then this candle is formed. Now this is very important. So one monthly candle looks like this, but inside this one monthly candle, if you go to the weekly candle, how many week you have? 4 weeks, right? Now if you analyze this one monthly candle and zoom in to weekly chart, you will see 4 weekly candle. Let's see how it may look like 4 weekly candle inside a monthly candle. Now let's say these are the 4 weekly candle inside this monthly candle. Now how it looks like? See, one monthly candle is showing only one candle, but inside this at the first month, say first of the month, the price opened here, and then the first week close here. After that, what happened? The bulls came, they pushed the price up, created a green candle where there is no green candle in the monthly, and then the price went well above this high. And then what happened? Again, the bears come, they push the price down here. Again, bears come in the last week, the price came well below here and then close above this level. Now if you see, the high of the weekly candle is same, and also low of the weekly and monthly candle is same. So that means this box is basically 4 weekly candle is representing 1 monthly candle, and that is the basics of multi-time frame. So if you go down to any time frame, say now if you go down to say daily time frame, then what you will see in each weekly candle, you will see 7 daily candle. Again, in 1 monthly candle, you will see 30 daily candle, which may go up and down and create a different trend. So that is what you need to first realize. So this is the basics of multi-time frame. Now let me show you in real chart how it looks like exactly. Okay, so let's see this example. This is New Zealand US dollar. This is monthly time frame, and you see this red candle. Let's draw a box around it, and then we'll see on the lower time frame how it looks like. Now let's go down to the weekly to see what we see on the weekly. Now on the weekly, see there are how many candles. So there are quite a few candles, because when we draw in chart it may not be exactly, but basically these are the 4 candles. So inside this 4 candle are of this monthly candle. So it looks like on the monthly. Now if you go down to the daily, see how it looks. So this is the monthly candle looking like on the daily. So if you see, you saw that the monthly candle open here, close here, but daily there has been a lot of oscillation in between. Now this is how it looks like on the 4-hour time frame. Now the question is why you need to know all of this. As I showed initially, that you need to identify trend based on higher time frame. Now if you are trading, say for example 5 minutes or 15 minutes, you don't need to go to the monthly to see what's happening, but of course you need to keep eye on the significant levels, because levels are same for all time frame. So if you are say trading 5-minute time frame, then if the price bounce from the monthly level, it will be in 1 minute, 5 minutes, same types of reaction. So you need to keep the levels on for all time frame. Now I'm gonna show you step by step how you can draw and levels and do the multi-time frame analysis. Okay, so this is British pound US dollar 4-hour time frame. So for example, you want to trade based on 4-hour time frame. So the first thing you will do is go higher 2 time frames. So go to the weekly time frame first. Okay, and weekly time frame, what you will do when you look at the weekly time frame, try to understand which way the market is moving. So the first thing you will do, the current week, always look at the current week candle, what is happened, and the previous week, and overall picture. So on the weekly, what we see that the previous week, say this one, this is a strong pin bar. So when this pin bar is formed previous week, that time I know that this week will have a bullish momentum. That is the first thing you need to realize. So when you have a weekly time frame, you have a bullish momentum. That means when you are trading on the 4-hour, you always look at buying, not selling, because you know that on the weekly the price will rise. So when you saw this pin bar, then say for example current week, what do you see? There has been a pin bar. Now it has went enough, there is a level here. So if you see, there is a strong level and the price already been bounced from this strong level. Now next week what might happen? The price will go to the test this level and may fall or may break. So there is a level here on the weekly that I have drawn. So that is what you need to do. You need to find out the weekly trend, weekly direction, and then draw the levels. This is the important level on the weekly. Now go down to the daily time frame. Now on the daily also, what do you see? The price went up and bounced from here. So this is the daily situation. Okay, the price bounce, so we see a trend to the upside and then the bounce from the weekly level on the daily and weekly level. Now go down to the 4-hour. Now this is where you will be trading. Now at this point, what you see, that say if you see analyze the market, you see an uptrend, right, creating a higher high and higher low, and finally what happened, the price bounced from this weekly level. And that is what you need to understand, that on the 4-hour it is in an uptrend, but on the daily it is already, on the daily and weekly it has a bounce. So if you look at only 4-hour, you may not recognize this level, because this is a very, very significant level. As you saw, this is a weekly gap level and also daily level, but on the 4-hour, see, all this level looks same. So there is a level here, there is a level here, also there is a level here. So if you did not look at the weekly time frame, then you would miss this level. You may going for long and then end up losing trade. So because it is a significant level, you might have a strong bounce or even maybe reverse from this zone. And when you are trading, you have to be very careful. You have to wait to see what's happening, or maybe enough double bottom or reversal pattern to break this significant level. And that is what you need to very, very carefully understand. Okay, so now let's see this example here. So this is US oil. So first let's look at the monthly. What do you see? The monthly, if you see, there is a strong level. Now why multi-time frame is important, you will now clearly understand. See, on the past, on the monthly, the price came here and strongly rejected from this zone to this, created this historically low in the history of US oil. This price came here. Now when the price went there, what happened? Look, the price strongly rejected exactly from the same level. Look at closely. So what happened? The price exactly rejected from this level on the monthly. Now if you did not look at this monthly time frame, then what would have happened? Say for example, if you only trading based on daily. Now when the price came here, see this daily red candle. When you saw this daily red candle, you can go short immediately, or maybe just on a retracement, and you can take a big move to the downside, or maybe you can close your trade. But if you are not looking at the monthly time frame, say for example, I delete this line here on the monthly, okay, I delete this level, then how can you know when, say let's do a replay here, okay, so how do you know when the price came here and created this red candle that this is gonna be a breakout? Because if you see, there are more areas where you can see a red candle. There is a red candle here, there are two red candle here. The price again continue to the upside. Again there is a strong red candle here, but again price continue to the upside. But why this red candle is so significant, very, very significant, because only you know that when you look at the higher time frame. So only you can see this when you look at the higher time frame. This daily candle rejected from this monthly resistance, and that is why multi-time frame is so important, because only when you draw the level on the monthly time frame, that time you know that this is a monthly level. And as a result, what happened? The price significantly dropped to the level where you can have a very good trade. So that is why you need to do proper monthly time frame analysis, draw the level based on higher time frame, determine the trend based on higher time frame. Because when you are looking at a trend, always justify the trend with the higher time frame. If you see a trend on the lower time frame, 5 minutes higher, like trending up, first go back to the 2 time frame high and see which way the trend direction is. Is it a retracement of higher time frame or just a continuation of the higher time frame? So when you see this is matching between lower time frame and higher time frame, the trend level, that time you have high probability trade and you can have a good profitable trade from out of this analysis. I sincerely believe that this video was really helpful to you. Now if you have any questions, let me know in the comment section. I'll answer straight away. Also, don't forget to subscribe. There is a lot of content I'll release in near future. Thank you for watching. I'll see you in my next video.